Welcome to VFX.
Welcome. So at the end of this video, it is expected that you will know when to approach the market. You'll be able to know when there is a high probability of getting clean setups. You'll be able to know when to avoid a day you shouldn't trade, but rather just let that day go. And then you will be able to know at the specific time, or say time window, you are going to look for your setups. So this is mainly Forex, and my name is Abdullahi X, and I'm a Forex trader. Yo. So let's get down to business. So the first thing first I want you to have in mind is you should only trade for, should we say 6 reasons? I should list it for you. Now, you want to be only approaching the market when the market has taken out the previous day low, previous day high, previous week high, previous week low, previous month high, and previous month low. Now, why did I say this? I'm saying this because this is when either a liquidity has been taken out that is taken out, for example, previous day high, the liquidity has been taken out, and there is a likelihood of a reversal, and the likelihood of markets to keep going higher. But the main thing is it has taken out the high, and people are probably selling to it, but it keeps going higher. There is more liquidity into the market. So these are when you get clean setups. So you want to really approach this market. You want to approach this market when it has done what I've listed. Because this is when you are going to have a clean setups. You can backtest it. That is it. Second is you want to be looking for your setups at a Q zone. But the one we're going to utilize for this particular video is the London Q zone, which is from 2 a.m. New York time to 5 a.m. New York time. You can change your time from this place. Just click on it and you'll be able to move it to New York time. But you want to be making sure that you are trading in Q zones, because if you don't trade in Q zones, you always get burnt out. That's when you hear someone saying, "Oh, I got the setup right, but the market came and took me out and then start going towards my direction." Why? Because you didn't take it during the Q zone time. The Q zone time, search for liquidity. It takes out stop losses, trailings. These are the times it does that. So you want to make sure you look for a setup after it does that, which is specifically during the Q zones. That is it. So now you know when to approach the market. Now you know at the specific time window. And what about when you are going to avoid the market? Well, it's quite simple. The time you are going to avoid it is when it has not done enough what I've listed. It didn't take out the previous day high, it didn't take out the previous day low, it didn't take out the previous week high, previous week low, previous month high, previous month low. It didn't take out any of it. Then you have no goddamn business trading that day. As simple as that. So the rules are simple. So let's get down to an example, and I expected that you are going to backtest it, and we are going to use my trade for last week. So let's quickly get down to business. Now, here we have the Wednesday low right there, and we are going to mark our session, which is the 2 a.m., which is the main time we'll be utilizing, to 5 a.m. And we can see that the 17 a.m. is the new daily candle. That's when it starts printing, the new daily candle. Now, let's look at it from the perspective of a 15 minutes time frame, which is the next time frame. I will always recommend this time frame. The 15 minutes time frame is a powerful time frame. If you utilize it well, your trading is really going to be on a different level. Now, let's look at it during the Q zones. We've taken out the low, which means Wednesday lows, which is on Thursday takes out the Wednesday low, which has fallen under the criteria that we're going to be looking for our setups. So what we're going to be having in our mind is it going to keep going lower, or is it going to keep going higher? And now we look for what the market presents to us for us to be able to weather or make our decision to know if the market wants to keep going lower or wants to keep going higher. But what did we see? It's quite obvious. After the market has taken out the low, we can see a displacement and you can see a fair value gap. But let's just say the market just take out this is coming for this fair value gap. Let's give it the benefit of that doubt. You want to have your confirmation? Fine. Now, supposedly that the market has taken out the low. Now it's coming for the fair value gap. But you're not sure if it's going to use this fair value gap to keep going lower. Then you allow it. You wait to see what is going to happen after it has reached for this fair value gap. And what did we see? We saw another break of structure with a fair value gap. So you already have your confirmation that the market is using this fair value gap and not this, and it has offered you another fair value gap. But here's the interesting thing. It's all within the Q zone. It is all within the Q zone. So you've been offered a fair value gap, which is this fair value gap is where I had my position, and it is recommended you put your pending order at the last candle, the first candle, as you wanna say it. Well, the first candle you wanna put it very close because sometimes the market just convert it and just reject, and you can have your stop loss here, and it's okay. Aim for your 1:3. So you can see how this market offered me an opportunity all within the Q zone. So I'm not concerned about how should I enter the market. I already have my rules. I have my criteria of when I should approach the market. I have when I should approach it, which I'm sharing to you. So I hope you find this video very insightful, and it is expected to please. You should backtest this, and I will have something for you in another video. So make sure you do the backtesting, and I will see you in another video.